In the unforgiving world of Wall Street, the man poised to reshape the financial landscape of America was not a product of a privilege. He's a visionary who, through relentless determination, revolutionized the way people invested. In 1905, Charles Schwab's grandfather moved from New York to California, seeking a fresh start, and soon he established himself as a respected lawyer. Charles' father, Lloyd Schwab, follows suit and also becomes a lawyer, and eventually is elected as the district attorney for Yolo County. As a young man, Chuck feels the immense pressure to succeed. But what Chuck does not know is that he was born with dyslexia, a learning disability not officially recognized until the 1970s. Chuck was a very strong-willed person. He would spend a lot of time after school rereading the books, trying to translate the words on the paper to something that his unique mind can understand. Additionally, he compelled himself to read a lot of stories about successful people like Rockefeller and JP Morgan, which further motivated him to become a really hard worker. Despite his immense effort at school, Chuck Schwab struggles with grades. Knowing his own academic limitations, he's forced to find an alternative path to enter a prestigious college. And soon he discovers the perfect solution. Applying the same level of intensity and effort, Chuck Schwab quickly becomes one of the most accomplished young golfers in the city. His golf skill ultimately secures him a spot at a prominent university on the West Coast. It's a school considered to be a life changer for almost any student at the time, Stanford University. Chuck Schwab's golf skill may have gotten him through the door at Stanford, but he quickly realizes that it will not keep him there unless he finds a way to overcome his reading disability. During the first 2 years, his grades were so poor that he was on the verge of getting expelled.
English, I was really slow in, so I had a terrible time in reading things. I was particularly good at math. I was sort of advanced and all that stuff.
There's so many different ways that you can solve a maths problem. So that's where it's sort of a gift to someone who is dyslexic, because they can have their own way validated, and it can be the right way to get there.
One subject that allows him to showcase his unique strength is economics. With incredible effort, Chuck eventually graduates from Stanford's MBA program at the top of his class. But after graduation, Chuck finds himself stuck in a dead-end job.
I was a stock market analyst in finance, looking at companies and trying to analyze them. So I learned from some people that were in that area, and that's how I thought you could create wealth.
In order to reach that level of success like his heroes JP Morgan and Rockefeller, he becomes fixated on starting his own company. After spending only 2 years at Foster Investment Service, Schwab teams up with his 2 colleagues and a client to establish their own company, First Commander Corporation. So this was the 1960s. So the market was booming. So Chuck saw there was a need for investors to have high-quality, well-researched newsletters, very analogous to financial media companies like Bloomberg today. The company becomes an instant success. Within a year, they gained 3,000 subscribers, each paying $72 annually for a subscription. They generate $216,000 from subscriptions, which is equivalent of $2 million in revenue in 2023. As the profit continues to grow, a conflict among the partners arises. Chuck wants to reinvest the earnings to expand the young business, while his partners desire to withdraw the money and live a better life.
I think one of the top 3 reasons businesses fail is making bad partner choices. You really need to know your partner and your deal before you begin, which will increase your chances of success.
Chuck Schwab was very growth-oriented from the very beginning, and he was not going to settle at being a boutique investment research firm. Chuck knows there's only one way to resolve the conflict. He must buy out his partners. He decides to obtain a $100,000 loan to purchase the shares for his partners until he gains total control of the company. With that control over decision-making, Chuck intends to focus his attention squarely on growing his company. At the age of 34, Charles Schwab is poised to become a financial titan. But his timing to buy out his partners couldn't be worse. Following the bear market run of the 1960s, the stock market is about to enter its most volatile decade.
The stock market toppled to new lows for the year again yesterday. The loss of 2.73 points in the composite index for the week was the largest since 1939, the oldest year for which it has been computed, and may have been the largest ever.
As investors run scared, the last thing they want to do is pay for newsletter subscriptions. In a blink of an eye, Charles Schwab's company is decimated. Even as a company of one, Chuck refuses to give up. He knows there are always opportunities, regardless of the economic environment. He just needs to find his own. And soon he realizes the opportunity may have been staring right at him this entire time. So during a bear market, the public tends to harbor a lot of animosity towards the finance industry. So the image of a stockbroker tends to be more negative. Chuck notices a growing number of independent investors who don't require any investment advice from their stockbrokers. They simply need someone to buy and sell stocks without asking any questions. Now, after a prolonged struggle, Chuck Schwab discovers a game-changing opportunity. He decides to launch a revolutionary type of a brokerage firm called discount stockbrokers. The problem is, he's broke, and no bank is willing to extend him any more credit. So he pitches his idea to friends and family in a desperate attempt to secure the necessary funding to bring his vision to life.
Would have to go to friends for a little bit of money. I had some people in YPO who thought my business was great.
Through sheer persistence, he ultimately succeeds in raising the money, allowing Charles Schwab Incorporated to officially reopen its doors, this time as a groundbreaking stock brokerage. Yet, despite his brilliant concept, his new business is slow to take off. After 1 year of operating a discount brokerage, Charles Schwab has only managed to attract 300 clients, as investors remain skeptical about this novel type of a stockbroker.
The number of roadblocks that most entrepreneurs have had to deal with would blow people's minds because they just see the success, not the grit that allowed them to keep going.
Just less than 5 years since he started the discount brokerage business, the market begins to see the value of this new approach. His business explodes, gaining over 45,000 clients and managing approximately $70 million in assets. As the business skyrockets, Charles Schwab now has a different kind of problem. The company was growing so fast, or too fast, that it wasn't enough just to reinvest earnings. It needs more outside capital. Chuck determines that the best option is to go public through an IPO. But the plan falters before it gains any traction. Charles Schwab's attempt to secure funding by going public might have stumbled. but fate has other plans in store. A prominent US bank has been closely observing the potential in Charles Schwab and is about to become the solution to Schwab's problems. Bank of America. In the mid-1970s, Bank of America stands as the largest bank in the United States, with over 4,000 branches and $100 billion in assets. But economic uncertainty, mounting inflation, and escalating interest rates led to stagnation within the bank. During this kind of environment, only a handful of finance companies are thriving. Companies like Charles Schwab. To profit from the untapped market, Charles Schwab becomes an alluring acquisition target for Bank of America. Now working as a subsidiary of BOA, Charles Schwab has virtually unlimited capital to meet their needs for growth. In the first 2 years following the merger, Charles Schwab appears to reap significant benefits. But all of that come to an abrupt end in 1985.
As of September 9th, 1984, 55 banks have actually collapsed this year, more than during all of 1983, and the most since the last year of the Great Depression.
Chuck eventually realizes that selling Charles Schwab to BOA has been a miscalculated move. Charles Schwab was a growth company while Bank of America was a big conglomerate that is very slow and risk-averse. So Chuck wanted to spend more money on new technologies, but BOA was very hesitant about giving them any money.
When the goals of the organization and the goals of the people who work there are in sync, that's when the magic happens. That's when a company is just firing on all cylinders. And if they're not, you're going to be upset. You're going to be pissed off.
Chuck's influence over significant investment decisions is limited, leaving him unable to pursue his vision for his company. He makes a fateful decision, one that now appears inevitable. He's going to reclaim ownership of Charles Schwab from BOA. So he led a group of investors in a leveraged buyout of Charles Schwab Corporation, and the deal was valued at $280 million, and most of it was debt. So once again, Charles Schwab was betting his own fortune just so that his company could be independent.
So you had a lot of your net worth tied up there. You also had a lot of debt ahead of you.
I had all my net worth and then some.
Chuck Schwab knows his firm may have gained the necessary independence, but the leveraged buyout deal places the firm at a significant financial risk. He needs to reduce the firm's debt by increasing its equity. The only viable option to achieve this is by taking the company public. The problem is, he has already tried it once and it failed. He is uncertain if people will show interest this time around. Charles Schwab raises over $134 million by selling 16% stake to the public. The company finally has a healthy equity to debt ratio, and the future finally looks bright. Just days after Charles Schwab's successful IPO, the financial market ground to a halt, resulting in what come to be known as Black Monday.
Stock markets were in free fall around the world today. The fall in Wall Street was worse than the crash of 1929.
Chuck is watching his world begin to crumble once again, right before his eyes. Due to the crash, Charles Schwab is forced to cut costs for the first time, laying out 15% workforce and reducing payroll by $9.1 million.
Shortly after going public, we had the crash of '87. Our stock dropped from 15 was the IPO price right on down to 6.
But Chuck knows the only way to survive for any business is by finding a new way to grow. He just needs to find that path forward. Chuck Schwab managed to reduce the risk by going public because he understands economic cycles. Finance legends like Chuck Schwab know that good times like that of the 1980s won't last forever. as LA newspapers retroactively called 1987 the best and the worst year for IPOs. These microcycles in our economy continue today, with IPO proceeds plummeting 94% in 2022. But this time, investors like Chuck are prepared for shocks with unexpected investment, one has put tens of millions into throughout his career.
Many people don't realize that Chuck is actually one of the top 200 art collectors in the world. In his mind, contemporary art is part of his portfolio as an asset. It makes sense because contemporary art prices have outperformed the S&P 500 from 1995 to 2022.
And amid 2022's record volatility, ultra-wealthy collectors like Chuck doubled their median spending on art. But billionaires haven't bought it all up. The global value of art is expected to grow at a whopping $1 trillion by 2026, almost doubling the current global value.
In fact, many subscribers of this channel and myself have been investing in art for years thanks to Masterworks' art investment platform.
Masterworks' fractional approach means you don't need millions of dollars to allocate to blue-chip pieces, and they have a track record of $45 million in art sold so far. Every single Masterworks exit so far has returned a profit to investors.
I'm a proud investor in a Basquiat painting on Masterworks, and through the link in the description, you can skip the waitlist to invest alongside me in a few clicks.
After consulting with the Boston Consulting Group, Chuck determines that the optimal strategy to revive his firm is to venture into the world of mutual funds.
Back in the 1990s, the mutual fund industry really took off. The industry assets went through the roof, going from $1 trillion to $6.9 trillion in total assets, growing at a 20% rate per year.
Leveraging their substantial customer base, Charles Schwab finds itself in an ideal position to capitalize on the burgeoning growth of mutual funds by establishing its own. In the year following its inception, Charles Schwab experiences remarkable growth in their mutual fund. But capitalizing on online trading, the firm's profits soar at an astounding pace. At the height of his success, Chuck believes he has fulfilled his dream of constructing a financial empire, akin to those of JP Morgan and Rockefeller. And the time has come for him to retire. David Pottruck, previously serving as the company's president, steps up as Chuck Schwab's successor. With the high standards set by Chuck, Pottruck is determined to elevate Charles Schwab even further, while preserving the success that Schwab already has.
But during a bull market like that of the 1990s, it was easy to perform well. So Pottruck started a lot of initiatives that seemed to have some success.
For the time being, Pottruck excels as CEO, with the company continuing to accumulate substantial profits amid the internet boom, fueled by an unparalleled influx of retail investors. But no prosperity can last indefinitely. For Pottruck, the true test of his leadership is just around the corner.
After what they are already calling Black Friday, it was the worst single-day point loss ever for both exchanges.
After the burst of tech-driven bubble, Charles Schwab's fortunes waned, with the revenues and profits plummeting, and the stock price spiraling from $50 per share to below $10 per share. The dot-com bust led Pottruck to recognize the necessity of safeguarding the company's core business. He believes the only way to do that is by diversification. Within just a few years, the company expands into various new sectors, including launching a bank and an institutional trading department. But as a result of his over-diversification, the profitability and growth of the company have declined severely.
By the early 2000s, Charles Schwab became this sort of big conglomerate mess of enterprise. A lot of divisions were barely profitable.
Recognizing the need for a change in direction, the board turns to the one man they believe could turn the tide: the company's founder, Chuck Schwab.
Charles Schwab Corp., the famed San Francisco discount broker that has struggled since the dot-com bust, abruptly dumped Chief Executive Officer David Pottruck this week, replacing him with the 66-year-old founder who shares the company name.
Chuck knows the key to reviving Charles Schwab lies not in diversification, but in focusing on growth and improving client service.
His story is very analogous to Steve Jobs returning to Apple. So he cut a lot of departments and product lines and made the company really focused on user experience.
Upon Chuck's return, the company experiences a dramatic transformation. Revenues begin to climb, and by 2005, profitability is restored after years of losses. The market rallies around Schwab, driving the stock price from a modest $7 per share in 2002 to over $20 per share by 2006. Having rescued the firm, Chuck Schwab retires one last time, passing the CEO title to Walter Bettinger. For Bettinger, the future appears bright. Confident in his ability to avoid Pottruck's pitfalls, he prepares to steer Charles Schwab to a new era. Mere weeks after Walter Bettinger assumed the CEO of Charles Schwab, the company finds itself plunged into the depth of the most devastating financial crisis in recent memory. As the crisis deepens, Charles Schwab becomes one of the most vulnerable firms on Wall Street. Its Yield Plus fund, that was heavily invested in mortgage debt, collapses within a matter of days. But to make matters even worse, the collapse of the Yield Plus fund draws the attention of the SEC, making Charles Schwab a target of regulatory punishment. As the new CEO of Charles Schwab, Walter Bettinger is in trouble. The company's revenues plummet, experiencing a staggering 20% decline from 2007 to 2008. But Bettinger is determined to revive the firm and to avoid suffering the same fate as Pottruck. He will spend the next 5 years trying to rebuild Charles Schwab. But to truly regain its past glory, he needs to do something groundbreaking. He knows the only way to save Charles Schwab is by focusing on growth and rebuilding the client's trust.
Bettinger realized that Charles Schwab made a grave miscalculation with mortgage-backed securities, and he needed to make sure to avoid that type of risk again.
In 2015, Charles Schwab launches Intelligent Portfolios, becoming one of the earliest pioneers of robo-advisors. Bettinger hopes by utilizing algorithms, the risks associated with the portfolio could be better understood and managed, ultimately providing superior service to clients.
I would tell people to buy Schwab. Now, he bought a lot of stock and he came on, and he's a terrific guy. He's a brave guy.
For 2015, Charles Schwab witnesses a staggering ascent, with assets under management skyrocketing from $2.4 trillion to impressive $6.7 trillion in 2020. Meanwhile, the active brokerage accounts tripled, surpassing 30 million, as innovations like Intelligent Portfolios captivate a new era of investors.
As is the case with a lot of big companies, the growth is not necessarily organic anymore. For Schwab, it came from acquisitions like USAA and StreetSmart.
Thanks partly to Walter Bettinger, Charles Schwab becomes the undisputed king of stock brokerages. His sheer scale and power have effectively kept his competitors at bay. What none of them realizes is that the biggest challenge will emerge from the most unexpected places imaginable.
You want to know what disruption really looks like? Well, you're looking at it. I think it's Robinhood. It's the privately held operator that launched its commission-free brokerage platform in 2015. This company's been growing like a weed 10 times since we saw them last in 2016.
Robinhood rapidly amasses a growing user base, seemingly appearing out of thin air. Baiju and Vlad embody a new era on Wall Street, where young visionaries achieve the impossible through innovation and resourcefulness.
Using Robinhood is less like using a traditional financial product where you have paperwork, you have to wait. It's more similar to using a technology product like an Uber or an Instagram.
Its rise was fueled by a surge of novice investors and heightened demand for online trading amidst the global COVID-19 pandemic. By the year 2020, Robinhood has gained over 13 million account holders. For Bettinger, every client that Robinhood gains is a potential loss for Charles Schwab. Sensing the urgency, he realizes that a time has come for his company to strike back.
Well, the investing world rocked last week when Charles Schwab announced the firm would go to zero commissions on equities and ETFs.
Removing the trading commission will cause a temporary revenue setback for Charles Schwab.
Investors don't see it as good news for the industry. Shares of Schwab fell sharply today. So did rivals like TD Ameritrade, E-Trade, and Interactive Brokers.
Bettinger is betting that Charles Schwab's quality service and better infrastructure will convince people to choose it over Robinhood. But by sheer coincidence, Robinhood is about to make a grave mistake and playing directly into Bettinger's hands.
Underemployed, sitting at home, using the power of the internet to destroy the kings of American finance. We have seen a massive surge in the stock price on the company called GameStop.
In early 2022, a short squeeze on the struggling retailer GameStop stock unfolds as amateur traders from Reddit's Wall Street Bets defy Wall Street hedge funds. As share prices soared, platforms like Robinhood halt trading, citing volatility and regulation concerns. Critics accuse them of favoring hedge funds over retail investors by limiting participation in the market surge.
David, we do have now some statements from Robinhood and Interactive Brokers about restricting trading. In light of recent volatility, we are restricting transactions for certain securities to position closing only.
To Bettinger, Robinhood's stumble is a golden opportunity to assert Charles Schwab's dominance.
Looks like you still buy GameStop at Charles Schwab, so there you go. There's GME, price right now $390.
Although firms like Charles Schwab eventually began to limit trades on GameStop, the most of the blame for the public falls on Robinhood.
Driven in part by the surge in retail trading during the pandemic, Charles Schwab added 5 million brokerage accounts in 2020. To further solidify their position, the regulatory authorities finally approved Charles Schwab's acquisition of TD Ameritrade, the project that was initiated in 2019. Overnight, Charles Schwab's client base almost increased by 50%. With twice as many broker clients as Robinhood, Charles Schwab stands tall as the industry leader. By 2021, Charles Schwab remains a hungry financial giant with over $7 trillion under management.
To me, the biggest lesson from all of it is your performance, or the performance of your organization, isn't determined by what happens to you. It's determined by how you lead, the choices you make, the behaviors you bring, and that even in extreme environments, that's true.
While Chuck Schwab laid the foundation for this legendary firm, his successor Bettinger has proven instrumental in his lasting legacy. Yet, the future of Charles Schwab is still uncertain. As rivals like Robinhood rise, the company must adapt and innovate to maintain its supremacy in the ever-changing world of finance, where even giants can perish in mere days. The struggle for continued prosperity and survival for Charles Schwab has only just begun.